when you have a demand shock, price rises. And that's what we're seeing. But now we're about to have a supply shock. Right now, we're buying 3 times the current production. That'll turn to 6 times the current production. But here's the problem. That's only 6 times current production if the miners actually sell. But a couple of the miners actually were buying.
After weeks of widespread fear, uncertainty, and doubt caused by the GBTC sell-off, the Bitcoin space has again turned positive and exciting for investors. At over $48,000 per coin, Bitcoin is up 12% in the past 5 days, 64% in the past 6 months, and 120.62% over the past year. Comparatively, the S&P index, which is currently at all-time highs, is only up by 21.50% in 1 year and 12.60% in 6 months. Senior Bloomberg ETF analyst Eric Balchunas attributes the ongoing rally to the rousing success of the newly launched spot Bitcoin ETFs. In one of his latest tweets, the Bloomberg analyst shares a chart showing just how successful the launches have been. The accompanying tweet reads, "Here's a look at the top 25 ETFs by assets after 1 month on the market, out of 5,535 total launches in 30 years. BlackRock's IBIT and Fidelity's FBTC are in a league of their own with over $3 billion each, and they still have 2 days to go. ARK's ARKB and Bitwise's BITB also made the list." In a follow-up tweet, Eric shares another important parameter that shows how successful the top 2 Bitcoin ETFs have been compared to other names on the list. His tweet reads, "A good chunk of these are ESG Bring Your Own Assets BS, meaning there is one investor behind the entire AUM. So, I looked at the percentage of days they had inflows in the first month of trading, which helps to separate organic from BYOA. IBIT and FBTC are both 100%, not to mention the $6 billion plus in volume. This is literally unprecedented." This chart shows that BlackRock's and Fidelity's Bitcoin ETFs have had inflows every day since launch, compared to BITO's 90% and Spider Gold Shares' 35%. During the latest episode of his weekly roundup with Blockworks Macro, Mark Yusko emphasizes the importance of these milestones and what they would mean for Bitcoin prices within the next few weeks leading up to the 2024 halving. As crazy as prices have been this week, Mark believes things are going to get even crazier as we draw closer to the halving in April, and absolutely insane after the much-anticipated event. As we bring you clips from Yusko's discussion with Blockworks' Mike Ippolito, don't forget to like and share this video, subscribe to the channel, and turn on post notification for more videos like this. Thanks, and enjoy the video.
Not the 2 best starts of 2024. Not the 2 best starts of the last 5 years. Not the 2 best starts of commodity ETFs. Not the 2 best starts of ETFs run by the largest institutions in the world. 2 of the best starts of all ETFs. This is simply a supply and demand story. And look, we talked about this for months leading up to the eventual approval, which we nailed, by the way. I mean, we were off by 2 days, 3 days, but we nailed it. I think what people just haven't internalized is it's this 2-step process, right? Is we had the demand shock, which is this Sailor-esque appetite, but not a one-time. I mean, Michael was like a one-time chomp, and then he'd digest, and then he'd chomp, and then he'd digest, kind of like a dinosaur, or, python. And this is more of, I don't know what the most voracious jungle cat is that, is eating and hunting, not daily, but weekly. I mean, this is going to go on for a very long time because of the resistance from the powers that be, right? Everyone who aligns with the Warren clan said, nope, that's not welcome here. Those new ETFs, they're not welcome here. And one by one, over time, that's going to fall, and it's going to increase the amount of capital that's trying to squish through the gate. The 4-year cycle exists because of the halving cycle. And the halving cycle is hard coded. That is not going away. And the supply, so we had the demand shock. That was what I was saying. We had the demand shock, right? We got the approval of these things. So the average person can now start buying. It's now a 1%, actually 1 to 3% allocation in the Fidelity broad portfolio. So they have a portfolio, they have an ETF that is all their other ETFs allocated based on their strategic view. And they have a 1 to 3% weighting and a 1% position in FBTC. The thing is, when you have a demand shock, price rises. And that's what we're seeing. But now we're about to have a supply shock. And that supply shock, guaranteed, whether it's 417, 418, people are wishing it's 420. It doesn't really matter what day it is. It's happening. And we're going to go from 900 a day to 450 a day. And at the amount of inflows, okay, that's happening right now, we're buying 3 times the current production. That'll turn to 6 times the current production. But here's the problem. That's only 6 times current production if the miners actually sell. But a couple of the miners actually were buying. I mean, literally, not only were they not selling to pay their electric bills, they were actually in the market buying. Now, that can't happen forever, but that's just a speculative move, people adding to their treasury because they anticipate this move. And the other thing that doesn't get enough conversation is this idea of treasuries, right? You have MicroStrategy, clearly the biggest part of his treasury. He's basically turned himself into a Bitcoin bank. But other companies have quietly added to, Morgan Creek has Bitcoin on our balance sheet. Now, we're not like Sailor, but we have it.
During the discussion, Mark also commented on Russian President Vladimir Putin's recent interview with Tucker Carlson. During the interview, which now has almost 200 million views on Twitter and over 12 million views on YouTube, Putin discussed various topics, including the decline of the US dollar's dominance as the global reserve currency. Putin noted that the US political leadership makes a big mistake whenever they weaponize the dollar. To use the dollar as a tool of foreign policy struggle is one of the biggest strategic mistakes made by the US political leadership, the Russian president said. He continued by adding, "The dollar is the cornerstone of the United States' power. It is the main weapon used by the United States to preserve its power across the world. As soon as the political leadership decided to use the US dollar as a tool of political struggle, a blow was dealt to this American power. I would not like to use any strong language, but it is a stupid thing to do and a grave mistake." Putin further noted that even US allies are now reducing their dollar reserves just to protect themselves from being dealt a similar fate with Russia. Putin further noted that about 80% of Russia's foreign trade transactions were made in US dollars and euros and is currently down to 13%. Comparatively, the country has increased transactions in Chinese yuan from 3% previously to a little over 34% today. Let's get back to Mark's interview as he talks about the weaponization of the dollar and the inefficiency and corruption of our political class.
This is actually part of what Putin was saying in the interview. When you weaponize the dollar, right, by sanctions, you force the people who are being weaponized against, who are being sanctioned. By the way, I love that you called it Twitter. Thank you. Don't call it X, call it Twitter. But my point there is what he says is he gave the numbers. He said 5 years, I think it was 5 years ago. 5 years ago, 3% of our trade was in yuan, and 34% was in dollars for Russia. Today, 13% of our trade is in dollars, and 34% is in yuan. So who's gaining economic power, right? If we believe the world reserve currency, kind of 1971 petrodollar standard, if we believe that, which I think we should because there's a lot of evidence to support it. That's being weakened by the policymakers' decisions to sanction and force these other countries. Like if you look at Iranian oil production, pre-sanction, post-sanction, straight line up. Well, why? They're going to find a way to sell their oil someplace else. Is the U.S. really is the U.S. really aligned with the principles of freedom? Taxation, inflation, is that freedom?
What country right now doesn't have taxation?
Is the suppression of a whole swath of people through the systematic theft of their wealth through inflation? Like you said it. Inflation is a choice. From 1776, the founding of the Republic, to 1913, there was no inflation. There was no systematic inflation in the United States. My only point there is there is a class system. There is a group of people that are making decisions that have significant and severe economic consequences for a very large number of people. Take the lockdowns. That was the greatest transfer of economic wealth in the history of mankind, from the masses to a very small number of people. $3.7 trillion went to the, and I don't like the term the billionaire class, but that's who it went to. Even Ms. Yellen said the word unsustainable, and she's one of the biggest problems. And we're on an unsustainable path. And I don't know how you feel, but I know how I feel when I watch our leadership talk about economic decisions. I don't feel good about it. And when I see the impact that it has, right? When I see the CEO of McDonald's say that on their own data, households under 45,000 are no longer going to McDonald's because they can't afford it. If you want to believe that's just an accidental result, like the runaway train, right? No one meant for the train to be going 80 miles an hour with no one on it, running it. It was just a series of small little accidents that accumulate. We can believe that. Or we can believe that there's intent, that there is an intention. And I talk about this all the time, Dictator Playbook 101. If you want to be absolutely in power, there's tons of examples of this in history. What do? You impoverish the masses and then give them handouts in exchange for votes. And I will argue, it's just my opinion, I will argue that's exactly what's happening right now.
Mark believes another round of handouts is imminent in the United States. However, he cautions that, like all the others before it, the stimulus packages, quantitative easing rounds, or whatever new title they are given, will benefit the ruling class and the elites 1,000 times more than struggling citizens. He gives an example of what happened with the pandemic handouts. While most, if not all, ordinary citizens have exhausted their stimulus packages, no thanks to the rising prices of goods, the billionaires that doubled their wealth then are still reaping the benefits from the handouts. What are your thoughts on Mark Yusko's interview? Please drop your comments and observations in the comments section below. Also, ensure you like this video, subscribe to the channel, and turn on post notifications for more videos like this. Thanks for watching.